You are listening to chartingwealth.com's weekly review and forecast, our comprehensive review we do once a week for the week beginning Monday, the 29th of January, 2018. We see stocks up substantially, the S&P 500 and the Qs. Of course, the Qs, we had that weekly vertical crossover for the week ending back on January the 15th. You see the magic and power of the weekly vertical crossovers continue. Just finished the fourth week, well, the third week after the weekly vertical crossover going up. What about gold? Same thing. We had a crossover going up back on the 5th. Beautiful. And what do we see on TLT? We called that down. And of course, we have a great short running on the 20-year bonds. Let's jump first into the S&P 500, talk about what we see and where things might be going over the course of the next week. Movement well above the weekly trend line, well above. The derivative oscillator continues to gain energy. Price percent oscillator spiked up even higher over the course of the last week, ended the week above the Bollinger Band. As we look at the two-day chart on the S&P 500, we see again price movement well above the two-day trend line, well above the weekly. We see the derivative oscillator, well, it's pretty much flat. And the price percent oscillator spiked up again. I mean, when is this market going to stop moving up? It will at some point. We're going to be ready for it when it happens to take our profits. What did we see happen? We talked about this yesterday. How would the market do on Friday morning? It could pull the blue PPO, price percent oscillator, back up after it started crossing down. And guess what, my friends? It did exactly that. Up in the morning and super strong in the afternoon, pulled the PPO right back over. Even the derivative oscillator, even though it had dropped off, gained a little bit in the afternoon. So that's where we are. Again, price movement on the 4-hour chart also well above the two-day trend line and well above the weekly. Things just keep going. How high will it go? We don't know. We're just going to keep riding it. Our weekly vertical crossover still in effect, going all the way back to the 29th of September. How high did it go over the course of the week? $286.58. Boom. That's from about a jumping in point of 250 over the month of October, November, December, and now right at the end of January. Is that not beautiful? From 250 to 286 and change. That's beautiful. That's the power of being able to read a stock chart. Again, we encourage you to practice with us every day. Do your virtual trading. Keep up with your daily market worksheet, your weekly market worksheet, which you should be filling out right now. Instructions are available at the website chartingwealth.com under our trainings. Plus, we email to you every day the PDFs for the daily market worksheet, weekly market worksheet, and trade worksheet. Let's jump in to the Qs. What do we see going on with the Qs? Well, we just finished our third full week of up movement since the weekly vertical crossover on the Qs. Stair steps moving up on the derivative oscillator. Price percent oscillators kicked up to an even higher angle over the course of the week, closed above the Bollinger Band. And again, looking quite beautiful. What was the high? 170.93 from a jumping in point of somewhere around, let's see, that following week, somewhere around, about 158, 159. So again, that is beautiful. That is beautiful. Almost a $10 up over just the course of 3 weeks on $160 ETF. Is that not incredible, my friends? Again, the power of the weekly vertical crossover and the power of the fall-winter trading zone. What do we see happening on the two-day chart? Well, it crossed over going up, of course, back on the 4th, just a day before the weekly crossed over. Price movement well above the two-day trend line, well above the weekly trend line. Derivative oscillator gaining energy, price percent oscillator heading up. Is the 4-hour telling us anything? Did what we were talking about with that up movement? Not enough in the morning, but up in the morning, but really up in the afternoon. Pulled that baby right back over. Derivative oscillator still negative. Actually gained some downward momentum, but the price percent oscillator has shot over. What caused all that? Weird oscillation, sideways sliding. Remember, oscillators need price movement, up or down, strong in one direction or the other, not vacillating. Oscillators need movement in order to give us accurate readings. When they start sliding sideways, they get sloppy. That's where we're on the Qs, the NASDAQ 100, the tech stocks. Things are looking great, my friends. How long is it going to keep spiking up like this? We don't know. But when it stops, we'll be the first here to tell you and to give you the warning signs as soon as we see them. TLT, the 20-year bonds, what are they? Well, when the market's surging, you would expect bonds to be going down. Bonds are a safe haven when the stock market's not doing well. And who wants to be in bonds when the market's doing well? Well, that's what we're seeing. Market is going down in bonds. We had our weekly vertical crossover going down back on the 5th. And we finished our third week of down movement. Price movement well below the 2-day trend line, well below the weekly. Derivative oscillator is gaining downward momentum. Price percent oscillator headed down, not at the same strong angle because a couple of days of pullbacks over the course of the last week, but still heading down quite strongly. As we go to the 2-day chart, what do we see? We see, again, leveling out a little bit. Could it be bottoming somewhere around 123.30? That's possible. Again, we're looking at our Heiken Ashi candlesticks. That means average pace. We see green candlesticks there on the last 2-day candles, the last two 2-day candles. And again, we'll just continue to watch. Even though it was a down day, remember, 2-day candles count for 2 days of down movement. We had up movement on the prior day. So we'll continue to watch things and see if things are bottoming. What's going on our 4-hour, and again, price movement, like we said, well below the weekly and the 2-day. What do we see going on the 4-hour chart? Well, we had 3 candles, so that's 1.5 days of up movement. That ended on Thursday afternoon, down some in the morning on Friday, down more on Friday afternoon. We still have a crossover going up on the 4-hour chart, gaining upward momentum. We'll continue to keep our eye on things, have some concerns about, where TLT is. But again, as long as the movement continues down and price is below the 2-day trend line and the weekly, and the 2-day is down, it's just that leveling off on the 2-day that is giving us a little more concern. We'll just keep our eye on things. But again, a down day of 0.37% on TLT. Just continue to watch it if you are in a down play on that. And again, the power of the weekly vertical crossover keeps showing itself. Isn't it beautiful? Going back to the weekly, look at our last chart. Gold up 0.06% for the day. Had that weekly vertical crossover going up back on the 5th of January. Remember, we had 3 on that same week, that same ending candle. We have seen price appreciation over the last 3 weeks. And again, another up candle. Derivative oscillator gaining upward momentum. Price percent oscillator heading up at a nice pace. That's on the weekly chart. We look at the 2-day. Losing upward momentum on the derivative oscillator. Price percent oscillator flattening out a little bit, but again, my friends, still strong up movement, well above the weekly trend line and the 2-day. So we'll just continue to keep our eye on things. As we look at the 4-hour chart, what are we seeing? Well, we had that doji, as we told you, at the end of the day. And again, our type of candlestick that we use, the Heiken Ashi, is average pace. And we see the average pace on gold on our short chart, even though it was up for the day, backing off. So we are keeping our eye on that. And again, we've had our 4-hour chart get sloppy on us as of late. So we're going to continue to keep our eyes on things, see how the week starts out. Like we said, price movements above the 2-day and the weekly, but we want to be careful on what gold's doing on the 4-hour chart. We do want to continue to ride that weekly vertical crossover trend as long as we can going up on gold. Folks, that's where we are as we get to the end of the week. We'd love to have some feedback from you, how you've liked those trainings we've salted into a few of the daily market reviews. If you have indeed enjoyed those, the one we put in yesterday was, of course, about news, good and bad, how to use that or not use that in trading, what news really means for you, and hope you got a lot out of that and the other trainings we put out. Want to encourage you that if you do enjoy the trading platform that we bring you every day, that is Free Stock Charts and TC2000, we do have a great deal from the Warden Brothers, $25 off if you wish to subscribe to a charting service. We don't think there's anything better than freestockcharts.com and, of course, their paid service, TC2000. If you're interested, look for the link on your daily market review email. If you're not getting those daily market review emails, you can still find those links under our postings at freestockcharts.com, but you really need to get the daily market emails to get everything that we do, and you can easily sign up for that at freestockcharts.com, chartingwealth.com. We'll get you all the information. We give you the layout at freestockcharts.com whether or not you subscribe to TC2000. That's the beauty of freestockcharts.com. Folks, that's where we are as we end the week. It's been a good week for the markets, doing exactly what our weekly vertical crossovers said they would do. We hope that you have a glorious weekend. We can't wait to jump back into these markets on Monday morning, the 29th of January. God bless from the whole team here at Charting Wealth World Headquarters.